For you this evening on What's Brewing, direct-to-consumer beauty and personal care brand Nat Habit has crossed the 100 crore rupee mark in terms of its annualized revenues between FY23 and FY24. The brand, which raised $10.2 million back in December, has been strengthening its presence online marketplaces and focusing on expanding its product portfolio. Joining us now to discuss the growth plan is Swagatika Das, the co-founder of Nat Habit. Swagatika, it's great to have you back on the show today. And congratulations on passing this 100 crore rupees in ARR for the fiscal year ending March 2024. Why don't you tell us what's worked for Nat Habit in the last year and what's contributed to you achieving this milestone in such a crowded market?
Thank you so much for having me. Like I've always said, it's the products, and products. There is just a tremendous amount of R&D that goes into a product, and that results in customer love. And that's what's seen us cross this immense milestone.
So it's product. We'll discuss your products in detail going forward, but you aim to turn EBITDA profitable over the next 17 to 18 months. So where will the next leg of growth come from? Talk to us about the targets you've set for yourself over the next year.
So we're looking pretty much at expanding our product portfolio. We still have some very large categories to enter into, which is like a shampoo, a hair color. And the second leg of growth is going to come from offline. We will be venturing into offline trade very, very soon.
All right. So like you just said, you're looking to expand your current product portfolio across hair care and skincare. So what's in the pipeline? Would you look at venturing beyond hair care and skincare in the future?
So for now, personal care is a very, very big focus for us. We just have about 1.5 to 2% market share in the online market. We are looking to build that piece up first. Of course, there are segues into baby that has been happening. It's a natural segue. There will be some beauty products out there, but the focus is still very, very heavy on hair and skin.
So looking at baby care, but hair and skincare is your main focus. Now, you have a strong presence across tier 1, 2 and 3 cities, right? And you're serving over 14 lakh customers. So how many units are you shipping per day? And what's the average order size for you? And which product is the customer loving at this point?
So we ship about 15,000 units on a daily basis. We touch about 15 to 17 lakh customers today. Of course, it's hard to pinpoint the exact set of customers, but this is all surveyed the range. What exactly is selling? So people love our hair care range and our Malai range. So Malai extends from face to body to hand. So these are like the two big ranges that people fall for.
All right. So those are the two big ranges that people are loving at this point. You know, currently you're seeing 55% of your growth coming from your own D2C side and the rest from your e-commerce marketplaces that you've pushed and put a lot of focus on, right? So are offline channels an option given the fact that your products have a short shelf life?
Right. So we're not going to be pushing, our products which have about 2 months life or 3 months life. We're trying to take products which have more than 6 months life. For example, our oils, some of our face washes. So those are going to be the ones that we'll start off with. Once we, stabilize our supply chain, we'll figure out a way to take even the shorter shelf life ones.
All right. So how soon will we see a Nat Habit store in the market?
The store is perhaps a little far away. We're focusing on trade first. But yes, you will see us on stores of multi-brand retail, your favorite shops out there.
And how soon will we see that happen?
In the next 4 months.
Okay, in the next 4 months, we'll see you in stores then.
Yeah.
Now, with the ARR target that you've set for yourself over the next 2 years, right? What about manufacturing? It's currently in-house. Would you look at outsourcing or building more units? What's happening on the manufacturing front?
So we're very, very particular about this, and we're very sure about this. Manufacturing is going to stay in-house. We have built massive tech capabilities and modularities into the manufacturing system that allows us to scale rapidly. So within the same facility, we'd be able to grow 5x without any issues. So manufacturing is going to stay in-house.
All right. So manufacturing is going to stay in-house and you'll be able to scale 5x within the same unit that you have.
Yeah.
All right, Swagatika, thank you so much for joining us on the show today. And we wish you all the best on this journey.
Thank you so much. Thank you again for having me.